Hello, good afternoon. You've tuned into Your Stocks, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much as always for tuning in. A quick look at what the market is doing. The last time when we checked, it was managing to hold on to the 23,400 level, but now it's come off that mark and it's down 60-70 points from that. So yes, we've seen a bit of a fall coming in the last 30 minutes specifically in the market. And when you're looking at it in terms of movers also, let's look at the Nifty mid and small cap as well. So seems like, that has also come off slightly a bit in terms from the day's highest point for the Nifty mid cap as well as the small cap. And in the broader markets, stocks that have fallen from the day's highest point, we've seen Vinati Organics, JM Financials as well as Signature Global among some of the names that have seen a sharper fall coming in the last few minutes or last hour or so that you can look. Especially in terms from the day's highest point, these stocks have seen the biggest fall coming in. So yes, that's what we're looking at it in terms of the market, a bit of a subduedness from the day's highest point for these stocks. But this is a show where we solve all your stock related queries, and that's what we'll be just doing. We have our experts joining in with us. We have Shahina Mukadam, an independent market expert, as well as Vaishali Parekh, Vice President of Technical Research at Prabhudas Lilladher, to answer all your stock related doubts. Vaishali as well as Shahina, good afternoon. Thank you so much for tuning in with us. Vaishali, once before we start with the stock related queries, just let's look at a quick check in terms of the markets. Today we did touch the 23,400 mark, but what are the important levels that we should be keeping an eye out on for the Nifty now?
Very good afternoon, ladies. Yes, it has been a breather because we've seen a lot of corrective move coming in the last few months. So Nifty now, I think, well, we have seen a one-way rally. It halted at 21,900 levels, and from there on, we are seeing a bounce back coming in. So, well, the prominent resistance for now is at 23,300 to 23,500 band. So if we sustain above that, we are looking at next target of 23,700 levels. So for now, I would elevate my support levels to 22,800 levels and look for a target of 23,700.
Okay, keep an eye out on those levels over there for the Nifty. But let's get started with those stock-related queries then. The first query we have is coming in from Arunacham Balaji, who's writing to us from Tamil Nadu, holding 1,100 shares of NTPC Green Energy. This is at a price of 106.49 rupees per share. Currently, stock is trading at 100 rupees. He wants to know whether, will he recover his losses anytime soon if he waits for the long term, or should he just look at selling the stock? Shahina, afternoon, and what's your view coming in for the viewer for NTPC Green?
Good afternoon to you and your viewers. Basically, what I believe is that, while the current price is close to the buying price of the investor, so he may recover his losses in a couple of months, I would say. But I do not see too much of upside from there. It will be closer to the issue price, the IPO price. Basically, while the long term, like if you say 3 years down the line, yes, the stock does look decent, attractive based on valuations, because they have over 7,500 megawatt, which is, ongoing projects, executable projects which they're executing over the longer term. But if you look at current valuations based on the current execution, the numbers look pretty, expensive. Valuation looks expensive. So I would say if you're looking for the shorter term, you can just wait for your price and then exit.
Okay, wait for your price and then exit. That's the view coming in from Shahina. Wait for your price and then you can look to exit. Your view coming in on this one, Vaishali, on the technicals and charts. What's the word for this one? I know obviously fairly recent, so not much in terms of past history for technicals, but anything that you could suggest on this front?
So, well, my view is that the stock has fallen right from 155 levels and then showing signs of bottoming out at 85. Currently, purely on technical terms, it's making higher bottom. So I think near-term support is at 95. So hold on with a stop loss of 95. And once we see a bounce coming in, this has a near-term resistance of around 115, 120. So that is a level to watch, probably exit then.
Okay, keep an eye out on those levels there. Let's move on to the next query. ONGC, this is the stock that we'll talk about. Jyoti Kalra is writing to us from Punjab. She's holding 50 shares of ONGC. This is at a price of 200 rupees per share. She's making some bit of a profit on this one. Wants to know whether she should continue to hold or look to sell this and book out her profits now. Shahina, your view on this?
I believe at current levels it's better to continue to hold. It's a good dividend paying story. And over and above that, we've seen crude oil prices now almost at about $72. And there it is almost equal to what it was in the previous quarter. It has recovered, right? So to that extent, even GRMs are going to be better. They have HPCL holding also. So to an extent, the whole, valuation wise, if you combine both the entities, it looks pretty attractive. Pure valuations, it's just available at about something like 7 times, 8 times EV by EBITDA, which is pretty attractive for a stock like ONGC. So I would say that it's a hold.
Okay, a hold coming in from Shahina. Your view on this one, Vaishali. ONGC in the last 6 months, around a 16-17% fall that we're seeing. Does it become on merit an attractive level to actually even start adding a bit more for the viewer right now? Or should they just book out the profits that they're making?
No, depending on what the time period and how short or long period that the client is, person is ready to hold. Because purely on technical terms, the near-term resistance is at 250. So if one has to make a new entry, the stock has made a bottom at around 210 and currently at 246. So wait for a dip if one has to add more, say around 238, 240 levels. That would be the ideal level. And once the stock moves above 250, I think it opens avenues for 270 to 80. So that's my view. So depending on whether you're a short-term trader or a long-term perspective, this would be the range. And once it crosses about 280, we can have a relook for higher target.
Okay, so keep an eye out on that level over there, 280. Then you can have maybe a relook at some higher target price. But right now, 280 is what you should keep an eye out on. Let's move on to the next query. We have Karan Dev Singh, who's writing to us from Jammu, holding some shares of Prestige Estate. This is at a price of 1,811 rupees. For the long term, he wants to know the prospects about the company. Shahina, we've heard a lot in terms of the luxury side of the trend. That has been doing well. These companies have a lot of orders as well as projects coming in. Recently, we also had a note that came in, I believe, from Citi that was also suggesting a bit of a buy coming in from Prestige Estate. But the viewer has bought this stock at a very high price, 1,800. So they're making some bit of a loss right now. What should they do for the long term then? Continue to hold Prestige?
Well, yeah, I think the viewer has bought it at an elevated price. At the same time, I can't really blame him because the third quarter numbers were so disappointing that actually you saw 45%. I think it was almost a 43% fall in revenues and a much, much bigger fall in the profitability. So you saw the stock correcting a huge bit, which was a bit surprising. But, and they did not have any bookings actually. They did not, I would say, launch any new projects in the last third quarter. But I would say hold at current levels because one is, of course, the stock has corrected. Two is the bookings and the launches of the new project that is in Bangalore, as you mentioned. They have got a good project that is near that Whitefield area. So to that extent, a lot of that booking is going to come in this fourth quarter. And as you know, a lot when the bookings will come in, you'll see the profit also jump. So it is better to continue to hold in this quarter, wait for the numbers, see how the quarter evolves and what are the level of bookings. I believe they're doing pretty well. Also in other areas like Mumbai, they are doing well. They have got number of projects that are lined up in joint ventures, their own projects, redevelopment. Also in terms of their retail space, they have got good plans going forward. So I would say hold. Current valuations, if you look at pure number, looks a bit expensive, but I think if you hold it for maybe 6 months to 1 year, things will look much better. So it's a hold.
Okay, hold coming in there on Prestige Estate from Shahina, and obviously we are hoping that the pre-sale numbers that should come out in terms of updates coming out soon as well in the next few weeks. So we'll keep an eye out on that, as well as the collections coming in for Q4 will be interesting for a story in terms of Prestige Estate and where that is headed after a muted show in Q3 is also the highlight coming in there. But hold is the view there right now on the fundamentals. On the technicals then, Vaishali, what is your view coming in? Because last 6 months correction has come in, right? We're seeing 35-40% downtick for real estate names overall and Prestige Estate specifically. So is it time to maybe, if the viewer is ready to hold for that long term, then maybe even look to average, right? Because 1,800 is the buy price, right now 1,200. Does that make sense?
I would definitely say so because we have seen a steep correction in this stock. So right now it is showing signs of consolidation and bottoming out at 1100. So that makes it a very strong support base of 1100. So I would say average out at these levels. And once you see the stock moving above 1300 levels, it brings in furthermore confirmation for strength for this stock to move again towards 1600, 1700. So that way at least he can lower his cost and probably get into a profit.
Okay. Look out for Prestige Estate then. Let's move on to the next query for today. This one is coming in from Gurmeet, who's writing to us from New Delhi, holding 500 shares of NCC. This is at a price of 290 rupees per share. Wants to know whether he should continue to hold or look to sell this one. NCC, what's your view coming in for this, Shahina?
I would say it's a hold at current levels. While the management has indicated that the fourth quarter may be slightly softer in terms of overall revenue growth, margins could be more or less at similar levels what it was earlier, slightly softer. But I think the order book position, the revenue target for the year is being met. And in terms of balance sheet quality, it's pretty good. They have got sufficient, reserve. They have got sufficient reserves as well as the ability to fund their growth going forward. I think valuation-wise also is just about something like 7 times EV by EBITDA. So it's a decent stock to hold in the space.
Okay, decent stock to hold in this space right now. And on the technicals, Vaishali, your view is similar that to Shahina?
I definitely agree. So because like most of the stocks, even this too has corrected quite a bit. And right now, if you ask me technically, it's making a rounding bottom. So I think this will gradually go towards 245. If you were to ask me, I would say, why not add more to get a good profit?
Okay, add more to get a good profit. Why not do that as well? But thanks for that view coming in on NCC there. But on that note, we're going to submit a very short break, and here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen. Welcome back to Your Stocks at CNBC TV18. We still have our experts with us, Shahina Mukadam as well as Vaishali Parekh, to solve all your stock-related doubts. Let's move on to the next query then. We have this one is on Canara Bank. Parag is writing to us from Navi Mumbai. 300 shares of Canara Bank is what he's holding at an average price of 124 rupees per share. Currently, the stock is trading at 87 rupees per share, so he's making a significant loss on this one. Wants to know if he should continue to hold this, book your losses, look to average. What's the view coming in? Shahina, your view on the fundamentals first.
Yeah, so the stock has corrected quite a bit. I think this is more because of the issues that the bank has had in terms of, they had slightly higher LCR. So because of which, actually, if you've seen, this has impacted both their NIMs slightly, not much, but on a few basis points. Also, their deposit growth was a bit lower if you saw the last quarter numbers. So I think all these things affected the stock price. But if you see at current levels, the price is so attractive. It's just a price to book of lesser than even 0.8 price to book. So I would say at current levels, it's better to hold, because in fact, you can add also, because if you see going forward, the asset quality has improved. Your net NPAs have come down. Also, I believe in terms of credit growth, they are growing in line with the overall market. So it is a hold.
Okay, a hold coming in there. And your view on the technicals for this one, Vaishali, where do you see this headed? And would you also say that the viewer should continue to hold this?
Yes, I definitely think so, because if you see overall in the banking counter, it is first the private sector which has taken the lead, but public sector banks have not really participated. And talking about Can Bank, I think I would say add more. 85 is the near-term support. And once we see some momentum coming in, and anyways, technically also this is making a higher bottom formation. So this can go towards 95 to 100, 110. So I would say add more.
Okay, add more is the view coming in from Vaishali. Okay, let's move on to the next query for today. This is on Vodafone Idea. Now, obviously, the viewer S. Jay Kumar is writing to us from Tamil Nadu. He's holding 2 lakh shares of Vodafone Idea. This is at a price of 7.90 rupees per share. Long-term investor wants to know whether to hold, sell, look to add more shares. Shahina, given the recent updates that we have seen coming in, especially from in terms of the AGR waiver, which is no longer under consideration, is what we understand coming in from the sources and reports. What is your view for Vodafone Idea? Does it make sense? Because right now it's exactly at the buy price. Is it better for him to get out of Vodafone Idea and look at maybe another telecom name?
Yeah, Vinny. Actually, if you see that news that you mentioned, it seems like now there is, they are not going to get the waiver, or the likelihood of that happening seems to be very distant. So that was a big disappointment that came in. And over and above that, the only positive news is that they're going to launch 5G in some areas, some circles. At the same time, whether that will be enough for them to get a lot of new subscribers, get market share is questionable. Balance sheet quality, while slightly improved, remains terribly stressed in my view. So any new fund that they're going to raise, there will be a lot of dilution. I think it is better to switch to maybe the same sector. Sector looks good. Something like a Reliance or a Bharti, even Bharti, either of the two Bharti group companies, it makes more sense. So I would say it is a switch.
Okay. Thanks for that view there, Shahina. And Vaishali, your view on the charts and technicals, any different, or you concur with Shahina?
So, Vinny, actually, technically it looks quite all right, but such stocks like Vodafone or Yes Bank, they really don't show any up move coming in. So I would say definitely switch over to Bharti or any other stock.
Okay, switch over to Bharti or any other stock on the telecom space is a better view coming in from both our experts. Let's move on to the next query. Shrikant is writing to us from Bangalore, holding 220 shares of Mazagon Dock. This is at a price of 659 rupees per share. So he's been holding it for a while, so making good amount of profit. Should he take out some profits now or continue to hold this one? Shahina, your view?
I would say continue to hold. The thing is, while the government has over 84% equity still, so yes, over the medium to longer term, you may see some stock come back into the market. Having said that, I think, the valuations are reasonable. So I don't see any impact of that on the stock price, even from current levels. Other than that, also, the financials fundamentals are very robust. They're continuing to show very good growth, both in terms of revenue as well as profitability quarter over quarter. And they're delivering almost about 3 of their vessels every year. This year and next year also it's targeted to do that. So I see a continuation of this. They've got order book position of, I think, around 35,000 crores in hand. So I would say continue to hold.
Continue to hold. That's a view coming in from Shahina. Your view on this, Vaishali, does it merit at least booking some profits and maybe looking at some other name, or would you also say continue to hold Mazagon Dock?
Actually, all these stocks have got into new round of momentum. So talking about Mazagon Dock specifically, this too has got into new round of momentum. So I would say keep a trailing stop loss of 2,400 since this buy price is pretty low. So might as well maximize on the profit. So 2,400 would be the stop loss, and the next target that we would be looking at technically would be at around 3,000, 3,200, and I guess perhaps even higher in times to come. So ideal scenario is keep a stop loss, because if it dips below 2,400, likely that it can go towards 2,200 to 2,000. So, that's the way to maximize your gains.
Okay, let's move on to the next query for today. This one is on Zomato. Shahina, a lot of viewers, I think every day we do have Zomato coming in as a query. Now, this is Himanshi Kapoor who's writing to us from Navi Mumbai. 70 shares of Zomato, price is 150 rupees per share. Wants to know the outlook on the stock for the long term. What is your view on the fundamentals for this one? Continue to hold Zomato, maybe book out some profits, look at something like a Swiggy as well. What is your view?
No, if the choice is between Swiggy and Zomato, I would continue to hold Zomato. Having said that, if he wants to partly book some profits in Zomato, he can do so. and then hold the rest for the long term. It's a concept stock in terms of valuations. I mean, pure numbers, fundamentals, it is on the higher side. At the same time, they're doing pretty well in their food delivery business. Quick commerce, yes, it's going to be some pressure on margins because of the expansion that they're doing in Blinkit. So shorter term, medium term, I would see some consolidation continuing, around current levels. But longer term, if you're a really long term investor, there is value in holding. You can part book some profits.
Okay, that was the last query for today. So thank you so much, Shahina, as well as Vaishali, for joining in with us, and a happy weekend to both of you all. And with that, viewers, we'll wind down this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. Up next, you have Closing Bell.